So you'd only want to do that if you're going to get basis appreciation, or you thought you're going to have a substantially higher market. And there's going to be times where the calls are much more expensive than the storage, and then in those years you would store it.
Yeah.
Because if you buy a call, you only have the risk of what you paid for a premium. If you store it, you have the entire risk of it falling down.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, Merry Christmas to everyone except soybeans.
And traders, they're still in the office, and tomorrow too.
And tomorrow, yes. Markets open until noon. Not that that matters. We're not recording live, but Merry Christmas, John.
Hey, thank you. Merry Christmas.
So we've chatted a little bit, and corn actually looks good, at least up front. What's the story on corn?
Well, let's start with a positive because there's not a lot. So corn in the March, May, and July contracts, that's the last of this new crop that you just took off, which is now quickly becoming the old crop. And it is the one lone bright spot that we have. You could argue that wheat is bullish too, but it's the boy that cried wolf with wheat. Russian crop is really bad and among the worst. The problem is there's not a high correlation with going into winter conditions and then final yield. But at least it will put a bit under the market, the world market, should it fall further. So you look at corn, March, May, and July are the three markets or the 3 months that we have a window where we can be very, very, very positive in. It really depends on that January report. So I think it's the 11th, if I'm not mistaken. That's going to be a very big report. They were worried that the government was going to shut down and that would be delayed. That does not look like that's going to happen. And it should be right on schedule. So I think it's January 11th, but I could be wrong on the date. It's a really important report for corn. It's really going to be the direction that we probably go for the next month after that. We have all this politics to look forward to, and everyone's trying to navigate what to do with their crop here. I think you've gotten some phone calls on what should I sell my beans before the end of the year? Should I sell my corn? I haven't had too many calls, but the guys definitely are thinking that out there.
Yeah, that's been my main call this week. Then I should say this week. We're recording on Monday instead of Tuesday, but end of last week, early this week, the calls I'm getting is I am selling corn and or beans. Which one should I sell, and how can I re-own them? And my first question is why to all the above, but they are doing it. They need to sell something, and everyone's leaning towards corn, both to save on storage and they like the price better, but that's also the one with the story. So it's a hard decision.
Yeah, and guys are used to soybeans doing all the heavy lifting here and pulling everything up and storing soybeans and having a better price as it tightens up in the spring. And the world markets are changing rapidly. And you'll notice that the last 3 years has been the high. Well, we don't know for sure on the old crop beans, but the last 3 years, the harvest has been the highest price that you've seen for the remainder of that crop year. So it's rapidly evolving. Storing beans has not worked. It doesn't look like it's going to work right now, but we don't know. Of course, we have a lot of stuff that's going to be in the days ahead. But as we get closer to that harvest in South America, that doesn't look like that's going to be the case. So I think that this being 3 years in a row, like you'll start seeing the seasonals evolve a little bit more with beans, and I think you're going to see people change with that. But for now, guys are worried about this tax year, that tax year, and of course that's on the tax side of stuff, which we don't do. And then whether I should cover it if I did sell something, should I cover it, and how should I cover it? Should I buy contracts or should I buy calls? And we've talked about how the calls are cheap this year in both beans and corn. They implied volatility. So what's what and what should I do? Some guys are probably still paying 5 cents a month, storage on their stuff. Calls are a lot cheaper. So, and we'll get to this, but that's one of the things you want to look at. Like just paying 5 cents a month. I think the calls were 2.5 cents a month. So you could own the same bushels for a lot less money. You would get paid for the physical corn, get that in your pocket, turn around, buy a call for half the price that it would cost for monthly storage, and then you would have only the premium risk. Let's say you paid 30 cents for 6 months, which is what they're paying, right? What they would be paying. So if you can get that for, let's just say 16, 17 cents, you're going to be paying half that, the premium, and that's all that you risk. So you'd only risk the 17 cents. So you're going to risk the 30 cents if you store it for 6 months in the elevator, and you're going to risk the downside in corn. So you have a lot more risk when you do it that way. So it really depends on what their storage situation is. At on farm, are they paying for storage, which is going to be really tough to do in a year like this. Already low prices, and you're getting dinged up every day. And then there's also the interest that we hadn't talked about. So a lot of tough answers. I meant this is a cycle I've talked about before. You don't want to put yourself in this situation. You want to market ahead or get to a position where you're not asking these questions. But for the majority, I think, like we talked about before we went on, the majority of people, this is the reality of it. And it's, do you want to give up more of the bottom line to re-own it? I mean, that's a simple fact that, is it even worth it this year? In bean side, I would look on the call side if I had to re-own it, because you never know with the soybeans, they can change quick. Corn, I mean, you can make an argument that you're better off maybe with futures with some sort of stop or a mental stop at least, that you'd be willing to risk on that. But just a lot of tough answers. I mean, what are your thoughts?
I don't understand pain storage, but I'm not the producer. When I look at the market and see what the options are out there, especially to re-own, especially options this year.
Yep.
The math doesn't make sense to me.
Yeah.
But I don't understand that other side. So I'd love someone to email us or call Jon and tell him why I'm wrong. But so from that perspective, especially this year, it makes more sense to me to sell everything.
Yeah.
And look at what you have for options if you want to re-own, or if you're just looking to add to your bottom line. What other options are there to do that with? I think corn options are really tough. All options rarely make money. Corn options are really hard to make money. So
the corn calls are, yeah.
Yeah. So there's a balance there. And I don't have the right answer, but if you are paying 5 cents a month for storage, you should really look at option prices right now.
Yep.
It's really what I would say.
Which is what I'm doing for the 25 crop, and we've talked about this a couple times. So we're talking about the 25 crop because this is when you talk about it now into May, and then that's how you break that cycle, so we don't have to talk about what we were just talking about. Like, you want to get out of that cycle, and of course every year is going to be different. And then sometimes springtime is going to be the excellent time to store and sell into. You just want to be able to recognize the year where it has potential and the years where it has less potential. With all the rain and the big crops that we have and the big South American crop, obviously this has a lot less potential going into spring than go back 3 years ago for corn, and we were 1.6, in October. And that would be a year where it has a lot of potential. So your first goal is to recognize what years have potential to store, when you should store, if you should store at all, or sell. I have clients that have no storage on their farms by 100% by their choice. They can afford it. They don't want it. They'd rather do it all on paper, and that's great. And then I have other guys that have monster amounts of storage, and they have more going up every year, and that's what makes them comfortable. So really, it depends on the farm, and it depends on the person, and it also depends on taxes, which, and whether you want to realize it this year, next year, and all that stuff. So that's a whole nother side of the business that has not a lot to do with us, other than we'll overlap with storage or no storage. But it's still, I think that most people just have storage, and they're going to use it with that mentality, especially in this area. I mean, if you bought it, like my friend just swang by the office, and he just bought himself a voltage meter, a circuit tester, and he knows nothing about this stuff, but he just paid $72 for this thing, and he's the type of guy that's going to use this thing. Like, it's going to get used, and he's going to learn how to use it just simply because he bought it. He needed it, but if he's going to pay that much money, this thing's going to get used. It's not going to sit in a drawer. So that'll be interesting to watch how that plays out. But the same thing with storage. Guys feel like, hey, I paid for this. Why am I going to leave this empty? I wouldn't say that's a great marketing plan. I think that your ultimate goal is to work towards knowing when to store it and to your advantage, and when to get rid of it, and then, or whether it's just better to cover it on paper this year, or it's better to store it. Obviously, if you're storing it, you're looking for price appreciation, basis appreciation, especially the basis appreciation. That's the big one, where you can cover that to some degree on paper, but that mostly happens on the local market. So your goal is to recognize when to use it, not just to use it. And I think that's a big mistake a lot of guys use. They bought it and they're going to use it.
And I think there's definitely a difference to storing on farm versus paying 5 cents a month. Now, it's not free to store it on the farm either, but it is in a lot of ways.
Time is money, and there's a lot of work that goes into the storage part of it. And also, we didn't talk about logistics, which I don't want to get anybody angry. Logistics is a big deal. There's farms so big that it's not possible to see. 3 or 4 years ago, I think it was $6.98 at harvest, and I told one guy to haul everything that they could haul in. They have so much that it's not a possibility to haul it in. So that's part of storage, is just the logistics of it, the weather, when can you haul it? Basis might implode, might be a great futures price, but a horrible local basis that's going to get better in a few weeks. So there's a lot of moving parts there. It's not as simple as it looks, but still the general concept, you don't want to store a whole bunch of stuff or pay for storage in a market that looks like it has no potential. Things do change, and you could get lucky, but it just hasn't been a winning strategy for a couple of years. It doesn't look like it's going to be a winning strategy this year either, going into next year. But I am hopeful for corn. So I'd rather talk about ideas to cover stuff for corn, and I have a number of different things I'm looking at.
Well, and I think, like we started with, corn up front looks good. And so from a storage standpoint, that is the one that probably makes sense.
Yep.
To have it stored, or if you have to sell due to tax reasons or whatever, there's options out there, right? And then we also, so that's your current crop, and then we want to talk about 25.
Yeah.
So what are you watching for 25 for hedging?
Okay, so specifically, like, there's going to be, so the front of corn is fairly supportive with the last report, and then we're going to know more in January. That's where we're going to know whether you should hang on to it. It's got a lot of potential, or this is going to start going the other way. Because, and we talked about it last podcast, I don't remember a market where corn single-handedly pulled everything up, much less just 3 specific contracts. Because if you go to December 25, which is the one I'm worried about, you keep hearing 96 million acres, 96. That talk is not going to get a lot quieter as we go into spring.
Right.
Although I don't think that's how it's going to play out. It never does. It never lives up to the hype, ever. But it's certainly not going to help the price in the back end. And if you notice, even on a day like today, December 25 corn wasn't up. This is a spread at one time I was on the wrong side. Now I'm on the right side of it. Or lightly, but the old crop's a lot more supportive for the next 3 months, which we should own the export market or near own it. And then beyond that, it looks really hard. So if you're worried about the December 25, I talked about the short dated last time. So if you go in the money, I think the 460s were 35 cents, and that'll get you to a 425 floor. And maybe you'd want to aim for something like for 30 cents and get a 430 floor. You'd need a little rally for that. And these are orders I'm not putting in, nor are anybody in. These are just ideas if you're very worried about the back end of corn. And then the 440s, I would like to get for 20 cents. They're 24. When they get to 20 cents, I'm not sure if I'm going to buy them or recommend to buy them for a hedge. But it's at least an idea that's out there, because guys are going to be like, they're going to look at this price, 430, 440. I'm just going to lock it in. The problem with that, and I talked about this last time, is we have all the stuff that's coming for the old crop corn. It could be very positive. That could pull December 25 up. Something could change in soybeans, where that market's going up, pulling everything up. Wheat, there's another market that everybody's ruling out. That could change. That could go up a lot. But my point is, to save a little money in their mind, they're just going to lock that price in, 440, and I'm going to panic. But it may or may not be the best price. What if it goes to 550? That's why I would prefer, through all this news, which is not a normal year at all. We got a whole bunch of stuff over the next 3 months. I'd rather pay for a little insurance, see how it all shakes out on everything. You'll also get to see the crop planting report, which is at the end of March, the prospective plantings, and which is a very important report. So I feel like it's dangerous enough with everything that's coming to have something on, but I also don't want to cap my upside on 25, and that's a big mistake. So as you cycle from a bull market to a bear market, eventually it gets to be so scary you start locking in really low prices, and you do a lot of it. And then all of a sudden something changes, and it goes up to $5.56 that nobody could have predicted, weather or politics. And then all of a sudden you don't get to participate on that because you got scared at the bottom. So my point is, there's something that's in between that. Yeah, you give up some more of the bottom line, but you get to see a lot of news. And at this time of year, which is, if it was in mid-June, I would say this is not a great idea. I'd still like a put in June. But if it was mid-June, I would be more interested in locking in prices, because that's a seasonal high generally, or May. But we have the whole South American corn crop that has to grow. That's not even planted, the second corn crop in Brazil. And then we have Argentina. And then we have Trump and what he's going to do. Who knows? Could be good. It could be bad. And then we also have part of our growing season. So you have all these things that could change, but people tend to panic at lows and start locking everything in, not even for 1 year, for like 2 years. And then all of a sudden it goes ripping out of there. And they were like, why did I do that? It's really hard hauling this corn in when everybody's getting $1 higher than me. So I'm not saying that's going to happen, but I at least allow for that to happen by giving up some more of the bottom line. At some point, if we're going to sell calls to try to make up some of this premium and pay for it fully, I'm not doing that today, but at some point that might be the case where this put won't cost much anything. But obviously that has upside risk too. So the whole thing is that you don't want to panic at these lows and just market a whole bunch of low prices. What you'd want to do is check with your guy and see if there's any ideas. There might not be. Like for beans, and I think we talked about it off there, I don't have any good ideas right now.
Beans are really tough. You were just reminding me, though, of 2020, almost exactly 5 years ago. I want to say it was March of 2020. People were really happy to lock in 890 beans. 880, 885, 890 beans in the spring of 2020. I believe that was. Or was it 2019?
2019. 2019 was the low prices. Into 2020 is when it got really good.
Yeah, well, the spring, right, was people were lying. Anyway, either 2019, 2020, I'd have to go back and look at historicals, and they locked in at 890, and I know it was the fall of 2020.
Yeah,
that beans ripped out of there. So if you were locked in versus doing something like an option or something that way,
yeah,
you were not happy. In fact, some people were very punished for that.
Yeah, I get accused of being negative sometimes. I don't know where that comes from, but but this is a positive strategy. You don't know, and we talked about this. You see on like the Facebook groups, why would anybody hedge? No one knows where it's going to go. It's exactly why you hedge, because no one knows. So I'm a ray of sunshine at this time of year. I I think that
You are Mr. Positivity today.
I think that it could be endless to the upside before everything's planted. I always think that. So I would rather keep my upside wide open. But you do have real risk to the downside. That's the bad side of this, is that, yeah, there's still very real risk to the downside, even from these levels. I know that guys don't want to hear that, but fundamentals are what they are, and they're not going to change. We've seen these cycles in the past. That's why it's kind of crazy to see on Facebook. I think that it's been so long that people don't know that it can do this. It just goes to the world price. That's what happens. And it doesn't matter if it's fair or not, but that's what happens for our export markets. Our domestic market's a different argument, but we're going to go to the world prices, and they are trending down right now.
Beans are obviously the toughest. I mean, is there anything to do on beans? I know you just said you don't have any ideas, so I don't
there
want
was
to put
that
you on
one
the
year.
spot, but
There was that one year where it was $9, and I think it was 2016 maybe, and no one gave beans a chance. Just like this, it was $9, just bouncing on the lows, and there was zero chance with a giant South American crop on the way. That was just a matter of days before they started harvesting. Then it started raining every day, and it never let up, and it went from $9 to $12 from April into May. I think it was the May time frame, because I think if you had May options on, it was one of those years where like 10,000 would have turned into 1 million. Of course, you'd have to have the foresight to invest in a dead market, $10,000 at exactly the right time, which no one did, of course. Right. But if you did, it went from $9 to $12. So that's why I say never rule beans out. But you're going to need something that we don't know right now. That changes faster in beans than it does for corn. But it could be something in the trade deals. I mean, it could be the weather, too much rain in the harvest like 2016. You never do know. So don't rule beans out. I wouldn't short them down here, but you'd have to pay me to go long as well. I mean, I wouldn't want to do that either. But there's a very real risk with the size of the South American crop that it could fall further. So yeah, it's just a hard spot. I mean, guys kind of wish they could have had that. What was it, 1060 in September, 1080? I think some of all the deferreds were $11. I think a lot of guys wish they had that opportunity back. I know I was out there fishing at Gull Lake, pre-fishing for a walleye tournament, and it was nothing but a headache. Like the beans went up every day. Some guys were short. It wasn't that big a deal, but it was every single day. I mean, it was like a rocket, and then one day it was just done right towards the end of September there, and it really hasn't looked the same since. A couple light bounces, but what guys are used to is this gradually getting tighter and tighter into spring and just being a better and better price. It's been that way for many years with some bear years mixed in, and now with the South American crop size, all that's changing, and that's really what's throwing guys off for beans. So I don't want to make it worse. Do I have any great ideas? No, I'm probably going to be looking at the put side of stuff if we can get a further rally, for all the politics and the South American harvest. That's what I want. I don't know if I'm going to get that done, but that's something I'm looking at.
Yeah, I'm hearing sell all your beans and buy calls, John. Not a recommendation.
Sorry, my phone's dinging. So one guy's texting about barley, and the other guy wants to add 2 DAOs, micro DAOs. So it's one of the podcasts. Suddenly it's a busy afternoon, the day before Christmas Eve. But I got some barley stuff to tackle, which I'm not sure I'm going to know.
Yeah, but I was just going to ask you, what are we doing for barley? What's the move?
Well, locally, isn't the big plant in Moorhead shutting down?
I hadn't heard that.
I think I had heard that. I don't know that, but that's a huge barley buyer. That's the barley for the Budweiser beer, I believe.
Makes sense.
But I saw something in the paper about that not being there anymore. So, yeah, those individual markets are a little tougher. I mean, that's more of a contract cash market stuff. But hey, why not talk about barley at one point? We'll save that for an episode.
Yeah, I only talk oats when we're off the air. That's the only market I look at. And
we were going to get into the pitfalls of hedging too, which ties into what we were just talking about. Why we're talking about what to do with the stuff in storage. Well, and that's a pretty big topic actually. There's a lot to go over there. But the main feature, I think we'll tie it in perfectly with what you're saying, is that you want to try to work to a spot where you're not putting yourself in these situations, these tough spots every year, and you're always working from behind the eight ball. It makes it for very difficult marketing. Not only that, you'll avoid marketing or looking for opportunities for the next year, and then the cycle will never get broken. The big miss that I see for marketing for grains is June. That's the easy one, that you'll have everybody and their brother saying the weather is going to fry this to nothing, and then you'll see it fall mid-June pretty much year in, year out, irregardless pretty much of the weather. We had the drought in 2012. Even that year, the high was August 14th or 21st, one of those. So it was only delayed by a month and a half in one of the worst disasters we've ever had. So that's a very strong time window. That's something that guys avoid. That's when you usually see the highest prices for the year. So that to fix your hedging, that's where I would look. My first spot I would look is in that May to June time period, and then work back from there. Another big thing is guys are underfunded. Mainly, they're in there with a few bucks in the market trying to see, kick the tires, see what's going to go on. They're not really hedging. They're just kind of hedging. So my advice is to get with a banker and get a very good plan together with a guy that knows what he's doing and your banker. So you got three guys talking or at least emailing, and you come up with a comprehensive plan that covers the what ifs even. So if a banker needs specific black and white, which they do like those numbers, they don't like the gray area, which we operate in, 90% of the time. They like specifics. So even if you are short futures, there's ways that you can protect that. Let's say, a $6 corn call looks really silly right now, but for 5 cents you could buy a call, and then you could hand your banker, hey, I'm short at $5, and I have this $6 call, and I had to pay 7 cents for it. But if something happens in the summer, I only have margins up to this $6 call. So you can, there's all kinds of things you can do, or you could just use options. But you want to get together with a good banker that understands this to some degree, and then come up with a plan. That's where I see the most success. That's where I see you guys do very, very well. Even if on day one it isn't a perfect hedge, with a banker behind it, knowing the market calls are going to be there, knowing what your goals are, that's what you want to work towards. When I've seen that happen, generally good results happen off that, as long as you have that black and white plan that bankers like. Generally things don't go off the rails. Also, another big thing, guys don't have their account set up correctly. There's a hedging account, and then you can have another account with one sheet of paper related account. Some firms might be different, but that's the way it is here. And you can have a spec account. So if you think that orange juice in Florida is going to freeze, your second account, you can just put it in there, and then the other account is just for hedging. So a lot of guys try to mix it. That's a terrible mistake. Then you don't know what you're doing with what. Sometimes you have conflicting legs on different spreads that I do. So just for that reason alone, I like two accounts. So you want to make sure you have your accounts organized and you know what your goals are in each of them. But that seems super simple, but it's a lot of things. This is something that a lot of guys don't do. And once they do it, it helps out a ton, because you know exactly what's what. And then for your taxes, it's going to make it much easier as well. And then one of the top mistake for sure is reading stuff online or subscription until you just find what you want to hear. And yeah,
I was going to say you're wrong on the top mistake, and then you went with that, and I'm like, oh, you're right.
I went on
you're
top
right.
of it. Yep.
Because I'm going to say a close second, though. We'll get back to the news, though. But close second is hedging and expecting to make money on every hedge, treating their hedges as spec trades, and they're trying to make money on every one of those.
Yeah, it goes with the account. So once you got that black and white, one accounts for that, one accounts for that, it seems to go a lot better. And then, when you're not trying to make money on everything, like I'll have a guy, when I say that, it's not like people are trying to lose money. So this would be a perfect example of, losing money in a good way. You're very worried about beans. You're worried about tariffs. This is actually happening as Trump comes into inauguration. What's going to happen? So you could have a guy buy, say, just for instance, a May soybean put. I don't know what's going to happen. I'm worried about it. I just want it on for this window. So he's buying insurance on a window that he thinks there's a lot of problems with, but he's not necessarily wanting to give up the physical grain yet. He would like to see that. So that'd be an example where you weren't exactly cheering to make money. You don't buy fire insurance and cheer for your barn to burn down. You want what you're trying to do is give the market a chance to see if it can go higher for some reason, but you don't like this price. But if it doesn't, here's my worst case scenario. So that's a perfect example of a hedge that you would not necessarily want to make money on. You don't want to just go try to lose money on hedges,
right,
which is
right.
what everybody tries to kind of pigeonhole you with, like, oh, you just want to lose money. That's what all brokers say. That's not at all what hedging is about. Hedging is trying to hedge a profitable price in, and you wouldn't do it if you didn't think that you needed to do it. So it's easy to look in hindsight. I didn't need that put. It was easy. We should have figured out China was going to do phase 2, and they were going to buy all our beans. I mean, that anybody should have known that. No, see, that's the problem. You don't know. So it's just guys that just want to literally hedge. They want to sleep at night, and you hear that a lot with the cattle. The cattle, I heard that 100 times when I used to do a lot more cattle puts before the whatever that insurance is that they buy, the LRP. I just want to sleep at night. You heard that more than from any group than the cattle guys. They genuinely did. They didn't want to sit there and worry about a collapsing cattle market. They just rather give up $5 in their feeders, and then they don't have to worry about it for the next 4 or 5 months. So it's a peace of mind for some guys. Just know what your goals are. Know what counts.
Well, and you can use the hedge to build, like we started this podcast with. If you want to re-own on the market, I mean, it's not technically a hedge, maybe, but you can use hedge to build your price to become more profitable too.
Oh yeah, that's the more on the hedge, the advanced side. Okay, so I talk about this 420 worst case scenario for new crop corn. The more advanced guys will be working on ideas. How do we build on this 420 price? Like we want to get our premium back, that 20 cents, to get it back up to 440 where the futures are. And then hopefully by the time spring rolls around, we have 440, or deep winter rolls around, we have 440 locked in, and that's paid for. So the more advanced guys are working on those guys, and a lot of times it would be selling calls in different windows. Obviously, you want to sell calls on the same crop year, and then you'd be looking to build a price. That's where you want time on your side. That's why you need to start working on a better price right now. Not try to build a better price later in 2 months, which is exactly where we started this. How do I get a better price? I only have 2 months left to hold this. Right. It gets to be really hard when you have a tiny window. So you're much better off with the larger windows and then working on building a better price. Whether you're selling puts and selling calls. I mean, there's guys do all kinds of stuff, and there's no cohesive strategy. They all have their thought process on why they're doing it the way they're doing it, but they are looking to build a better price. Absolutely, that happens all the time.
Yeah. Sorry, I totally hijacked your go out and read the news, so I'll let you get back to that rant. But I thought it was extremely important. You said the number one problem with hedging is, and you trail me with, read everything is going to destroy your plan.
I think that they know that. I don't think that they're going to be able to lay off that high fastball. The ever-revolving door of subscribing to all the answers. That's what everybody wants. They want it just handed to them. And it's really a process that you have to learn. And you hope to get good information. And there's no doubt there's good guys out there. But, it'd just be easy if I could just sign up and then I wouldn't have to think about this anymore. It doesn't exactly work like that at all. Yeah, the market's changed way too fast for that to be effective. So you'll have to put some effort into it. But just the thought that you're someday going to find the answer online, and you're probably going to be disappointed. And so you see a lot of guys subscribing to this, subscribing to that, looking for what they think is going to be the answer. There's a few guys that I like that get a lot of information out to guys. I think those guys are much more helpful They just simply get the information and they want you to make your own decisions. I like those types of guys for sure. And I think that's where ultimately you need to go. I'm sure there's some outfits that claim they're the top 90% of all the price ranges and all that. You see that kind of stuff all the time. Or the newsletters where you're reading it for months, and then about 6 months in after the market collapses, then you see all the past recommendations that you don't remember ever seeing at the time, but somehow they 20% marketed, 10 cents off the high, another 10%, another just you see a lot of that. It's endless. So you want to get to try to getting better information coming to you and just educating yourself and taking the reins there. But you'll still need help with guys that know their way around the market. So that's what you want to ultimately get to is to get off that, because it's just, how is it working for you is a better question.
Right. I would say a great question is, how does this compare to what you've done before?
Yeah.
Are we improving or not?
Yeah.
Has your marketing years been better?
Yeah, it doesn't all happen here. Sometimes there's large losses, but are your marketing years better? I was just talking to a client. Actually, that's the guy that wants to be involved in the micro DAOs here. How has it? We had that conversation today. How has it been going? He was very pleased. He's had a good 3 years. Just on following the USDA his numbers for himself and not listening to the news. He kind of broke out of that. It wasn't any secret that I had. I gave him a good organized, way to look at the USDA's numbers that was easy to click on and maybe takes 5 minutes every 3-4 days, maybe every week. And then he was able just to avoid the noise and the drought talk and just market better just on knowing the USDA's numbers. I mean, really, it was all that simple. Meaning he saw how bad the numbers were for soybeans and he sold them early. And it was really that simple for him. And so a lot of times people make it way too complicated. And I think the KISS system, keep it simple, stupid. I think that's very good.
Yeah. I also think that people have a bias to read news that fits their opinion.
Yeah.
And so if you want grain prices to be higher, we tend to seek out news that tells us why grain prices might be higher.
Or if you think the stock market's going to collapse, they call it doom scrolling.
Oh, yeah, I doom scroll.
I'm a big doom scroller. But I don't know what it's for positive grain stuff. We'll have to make up our own saying for that. I meant next episode we'll have that. But it's the opposite. They're looking for positive news and scroll, because obviously they raise it. They don't want to be looking for bad news on it.
No, I wouldn't want to see only bad news, and that is a problem where you and your reputation, John, have always been on the bear side, but it is because we look at that side. That's what we're trying to protect against.
Yeah, and the commodity markets fall a lot easier than they go up. I meant that you can go look. I mean, as fun as this riding cattle is, everyone knows how this is going to end eventually, as all markets do. Much easier to go down. You need no news to go down. You need constant good news to go up. And that's why it's a lot harder to make money in calls. And when the market does go, calls make a lot of money.
Absolutely.
But it's a lot easier to make money in puts than it is in calls. And there's a reason for that. Just the gravity's heavy in commodities. Always has been. Always will be.
Very true. Well, John, anything else to add this week?
No, I was going to talk about cattle, but we'll just go into holiday mode with cattle. Usually it glides through the holidays with all kinds of crazy cash stuff happening.
I think you just jinxed it.
Yeah, yeah, exactly. Probably derailed the train here. We'll see. So I'm hoping we'll talk more about cattle, because we are coming to an important window there. We'll talk more next episode about cattle. But no, just hoping to enjoy the holidays. I got from one of my clients, came in the office, hand delivered. I had to pay for him. He has a farm. Some nice beef tenderloin, big ones.
I'm jealous.
Yeah, no, 2 big ones in the freezer. So I was pretty excited about that. That's my highlight for the day. But I'm looking forward to Christmas Eve and Christmas.
Yeah. My son is home from the Marines. He just got home while we were recording this. So
Very nice. I would imagine you want to get home.
I'm excited to get home, enjoy the holidays, and we'll chat next week. You want to leave your number?
Sure. 218-731-1578.
Thanks, John.
Yeah, thanks. The front of corn is where all the fun is, and the back of corn is where all the heartbreak is.